Consensus Hong Kong 2025 is where the global crypto community converges to shape the next era of Web3. From February 18th through the 20th, Hong Kong becomes the meeting point for leaders across finance, technology, and digital assets. This isn't just a conference, it's where deals are made, partnerships are forged, and new opportunities emerge. Consensus features exclusive networking lounges, expert-led sessions, and invaluable insights from top industry voices. Whether you're expanding your network, building your brand, or closing your next big deal, this is the event that moves markets. Visit CoinDesk.com/consensus-HK to secure your spot and use RealVision15 for 15% off. Don't miss your chance to be part of the industry's defining moment.
Hey everyone, sorry to interrupt, but this is the cheesy podcast bit that gets on everyone's nerves, but it's really important to me. Please, if you can like the channel and also subscribe, it helps me a lot to get the best guests in the world for you guys. So click like and subscribe. Appreciate it. Thanks. Hey everyone, sorry to interrupt, but this is the cheesy podcast bit that gets on everyone's nerves, but it's really important to me. Please, if you can like the channel and also subscribe, it helps me a lot to get the best guests in the world for you guys. So click like and subscribe. Appreciate it. Thanks. Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Dan Morehead, how the devil are you?
I'm great. It's good to see you again.
Yeah, always good to see you, my friend. I hope you had a good break over Christmas and New Year.
It's good. And, blockchain never stops. So the markets get more interesting every year. You and I have probably known each other 25 years and been doing crypto together for a decade. It feels like 2025 is going to be one of the big ones.
For me, it's all feeling a little bit like 2017 all over again. There's a lot of similarities. And I want to hear all of your thoughts of. Let's talk about 2025, because I think it's what people want to hear. You've got some views on it. There's a lot going on. Politics, regulation, macro, everything. So lay it on me.
Sometimes a lot of bad things happen at the same time. And then, sometimes a lot of things are all positive at the same time. And that's what I'm feeling about right now is that, the lack of regulatory clarity was essentially holding the industry back for a while. And we've had some big changes, like the largest ETF of all time happening a year ago. And then, the election should bring, more changes in the U.S. And, the U.S. does lead the world in, kind of regulatory, kind of feelings or the impressions that investors get. And so I think this year having all that kind of change should be good for our market.
So we'll dig into some of that, but let's start with the macro, because you and I are macro guys at heart. The macro, and I don't know if you knew Scott Bessent.
I met him back in the day when we were both running hedge funds, yeah.
And I've known Scott for a while as well. So I want to see where you think the macro is and how the new administration might fit into that. Hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now.
I've had a very out of consensus view on macro for 3-4 years now, actually. I think the economy is just red hot, and the Fed made a massive mistake keeping rates way too low, way too long. And as you know, kind of unwinding mistakes is a lot harder than kind of doing a little bit at the time. If you think back, March 2022, Fed funds were minus 830 basis points, real rates. Fed funds were still zero, and inflation was 8.3%. That's just a massive, massive kind of inflation impulse. And then, of course, the Fed bought $9 trillion of debt and basically dared everybody in America to buy a house. And they did. A record number of people bought houses. every house in the entire country is up 40% from when they started. And so those are massive inflationary impulses, and they really take a long time to work through. And so I think the Fed, really has no room to cut. And I did notice the first time a newspaper article about maybe starting to tighten. And that was my prediction back in December of 2021. Fed funds were 0 and the 10-year note was 1.3. And I said both were going to 5 and staying there for a long time. And that's still my view. I think Fed funds should be 5 or higher, right? And I think rates probably are going, long rates are probably going up. The 10-year note's only 100 basis points over inflation. That's not really paying you to take that kind of risk. So the big picture on macro is I think the Fed, has to keep tightening or staying tight or tightening.
The issue is with that is because they have to refile the debt, you end up increasing the debt burden all the time.
Yeah.
How do they deal with that? Because, they don't really want to do QE because everyone knows what the game is, which is money printing. How do they deal with the excess supply that comes from just having higher rates without, a lot of the debt increase is just the servicing of the debt itself?
You, my friend, if you knew the answer, you'd be smarter than me. I have no idea how they get out of this. It's really tough. The U.S. now spends more on interest than they do on defense, which is a wild place to be. The deficit is 6% of GDP in literally the best of times. Like there's, full employment, everything's great. Like if you have a 6% deficit when everything's as good as it possibly get, what's going to happen when, some kind of rainy day shock happens. So I literally don't know. And that's why I'm so bullish blockchain, because it ain't going to be good for paper money is basically the answer. However, I don't know which way the government's going to try and get out of this, but the U.S. went essentially to an adjustable rate mortgage a while ago and financed all the debt at very, very short intervals. It's all coming due, as you say, has to be rolled over. Rates, used to be 1.3 for a 10-year. They should have done a lot of debt issuance at that level. It's 4.3 now, and it could be 5.3 or 6.3 in the next few years. So I really am worried, as an American citizen, like how's our government going to get out of this? Because they have an enormous amount of debt. They're piling on 6% of GDP every year. That's a huge new amount of debt. Rates are heading high. They're much higher than they used to be, heading higher. And most countries, when faced with that, inflate their way out of it. The U.S. hasn't historically done that. There's only 13 countries on Earth that have not defaulted on their debt or had inflation above 20%. The U.S. is one of them. So the U.S. hasn't done it, but they could.
My view is that they do it more slowly using debasement. So that's the liquidity, the printing of money in lots of hidden ways. There's lots of ways throughout the system. And from my measurement, the global central banks and governments combined are increasing the global supply of money or debasing the currency by about 8% a year. So it's a tax you don't see. Most people don't understand it. The price of scarce assets keeps rising because you're lowering the denominator. You know this from emerging market days. Most people don't really understand this mechanism, but that's what happens. So, your wages don't go as far and the assets keep going up to make housing unaffordable, and 8% a year. But the flip side of that is without doing that, you end up with a huge crisis, which is even worse. So it's a rock and a hard place, right?
No, I agree with you. And we have seen this movie before in the EM markets that we were in all those years. And inflating your way out by printing more money is really the common way people get out of this. And so I think it's going to happen. And that's why I think you're right that when you talk about the value of scarce assets when priced in paper money terms keeps going up, right? Gold's at a record high, stocks are at record high, real estate's record high, Bitcoin's record high. Maybe they're not moving. It's the price of paper money that's going down, right? And Pantera once did a graph that probably old Twitter feed would have of the price of all those things, price of the U.S. dollar, priced in bushels of corn, a share of the S&P 500, gold, an ounce of gold. And it's pretty much the same graph. It's the price of paper money that's crashing rather than the price of all these things going up relative to each other.
What I've been doing at Global Macro Investor is dividing all assets via global liquidity, which is an index we build. And what you find is the S&P 500 has pretty much gone nowhere. There's a bit of growth driven by the tech stocks. Gold has gone nowhere. Real estate's gone nowhere. None of this has gone anywhere except NASDAQ and crypto, obviously, because they're both technologies that are being adopted and crypto's the big outperformer. So I found that, our hurdle rate for assets is 8% a year for debasement plus, let's say, 3% inflation is 11%, just as a hurdle rate, which people haven't got their heads around yet.
Yeah, and that really is the story for fixed quantity things like Bitcoin or other cryptos, is that if the governments around the world are currently debasing at 8% a year, they're probably going to have to speed up. Why be in something is being debased, right? Why not be in something that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P? Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year. That's pretty good compared to -8, right? Like plus 90 versus -8. And again, investors shouldn't put 100% of their net worth into crypto, but for the majority of institutions,
you and I have been there for a while. 100% of net worth.
No, that was probably not a good idea. Probably put a little pressure on the spouse and everything. But but if you're somebody who doesn't have any exposure yet, you really should have some to essentially hedge the risk that governments do continue to debase their currencies. If you think about currency debasement, it used to be pretty straightforward, right? When I was a kid, silver-colored money was silver, right? Like dimes and quarters were made out of silver, and now they're made out of some cheap alloy, right? And even pennies, right? Pennies used to be made out of copper. It's a 5-year criminal sentence if you melt a penny in the United States, because the intrinsic value of an old school real penny is more than 1 cent, right? And so the government has to criminalize accessing intrinsic value there. And my favorite one is a pound sterling, right? Is, of course, used to be worth a pound of sterling silver. It costs 184 pieces of paper, pound sterling, to buy a pound of sterling silver. So governments are really good at debasing currencies. Unfortunately, I think they're speeding up, like all the stuff that you're talking about with deficits and paying more in interest than defense, speeding up. And so, again, that's why everyone's going to crypto. A couple 100 million people are using crypto now. 4 billion people have a smartphone, and that's all you need to operate crypto. So seems like 1 billion people will be using crypto in the next, say, 3-4 years.
Yeah, I mean, I've got my measure to get to 1 billion. I think it could be, 2 or 3 years. Probably, it's reasonably fast. The other one of the macro, before we move on from that, is when you look at the rolling debasement. Like 2017, the US were actually tightening the balance sheet, raising rates, and M2 was falling. So all liquidity was shrinking in the US at the time. They used their general account because of after the election and the debt ceiling. The big one in 2017 was the Chinese. And it feels like we're about to replay that exact rule book again, because the dollar's been too strong for them. They're pretty fucked. They're going through a debt deflation. They've got the aging population, slow growth. We've seen the entire rule book before, right?
Oh, yeah. No, I agree. And, China's always the unique, interesting, different thing out there. And at some point, we'll probably get around to talking about what I think is going to be an arms race to acquire Bitcoin once the U.S. has a Bitcoin strategic reserve, and China being the most interesting one because they have their entire history savings in an asset the U.S. Treasury Secretary can cancel. I mean, that's pretty wild, right? Like, they have $2 trillion in something that if things became more adversarial, the United States could cancel. So they're going to have to take a hard look at Bitcoin as a strategic savings vehicle over U.S. Treasury notes. So that as well could put pressure on rates in the United States as foreign nations decide they need to save in something other than U.S. Treasuries.
So let's talk about that, about the Bitcoin strategic reserve. What format do you think it's going to be? Because we saw some noise on the tape today that it might not just be Bitcoin, it might be other US crypto assets, XRP or whatever it may be, Solana. What's your thought on all of this? Or is the US going to be openly buying crypto? Or is it going to be stuff that they've they've seized and ongoing seizure from criminal stuff. What do you think?
The U.S. does own 1% of all the world's Bitcoins already. We actually participated in the first U.S. Marshal Service auction in 2014 or whenever that was, which is really cool to see the U.S. Marshal Service star on the Bitcoin page, So this is just my own professional hunches, but I think what will happen is the U.S. will do a strategic reserve, but just Bitcoin. The analog would be old school gold, Fort Knox. We have an enormous amount of gold stored as a currency reserve. We don't have palladium or silver or anything else, right? So it's easy to get one very well-known thing that has 60-something% market share through. So if I were a betting man, I would say it's just a Bitcoin strategic reserve, not kind of blockchain generally. And there's actually 3 different ways the president could, or the United States could, acquire new Bitcoins. The first one is the president could decide to direct the U.S. Marshal Service to stop selling the Bitcoins that the U.S. has seized from criminals. That is about $14 billion of crypto. And for comparison, we have 650 billion of old school gold. So, it's a pretty small amount relative to other things. There is a old thing called the Exchange Stabilization Fund, which allows the president, by executive order, to stabilize currencies, and no one's tested whether Bitcoin's like a currency or not a currency in that definition, but it probably is. So the president could do some of that. And then Congress, I think, would have to pass any legislation to buy like a significant amount, like we really wanted to do. Sometimes people talk about buying 1 million Bitcoins or whatever. That would take Congress, but there's been a huge swing in Congress too. So it's not unthinkable. Obviously prior to this election, that would have been unthinkable. But from what tallies I've seen, the majority of the people in the House, 270 or so, support crypto, and in the Senate, it's probably a lot less, maybe 20 or 25. So it's definitely something that could happen. But the point being, there's 3 different ways that Bitcoin could end up staying on or getting bought by the U.S. government. And I think at least 1 or 2 of those will happen, and maybe all 3.
And then that begs the question of who next. We know the Middle East is doing it, whether it's via their family offices, but maybe not directly in the sovereign wealth funds. It makes total sense for them because they want to be part of this entire thing. So what do you think? Middle East, next major player?
Yeah, I think you're spot on. I think it's very sensible that the U.S. save in something other than just gold. Gold's been great for 5,000 years, but, it's past its sell-by date. Digital gold's a great thing, so I think, the U.S. will do it. And then once the U.S. does it, you're right, there are all kinds of both strategic alliances and competitive dynamics out there. And that's the thing I think people forget is it does seem likely that places like the Gulf that want to stay aligned with the United States will replicate a strategic reserve. That seems to make sense. But equally, I think the countries that view themselves as adversarial to the United States would want to hedge, China being an obvious one, but there's a lot of countries out there, they're certainly not fully aligned with the United States, and would want to at least have some of their savings or FX reserves in a currency that's independent of, whatever the U.S. Treasury Secretary wants to do. So I think you're going to see it from both sides, the U.S. and people that want to be aligned with it, and then people that are worried about U.S. hegemony in the financial system.
Yeah, it was one of the most, I think you wrote about this as well, and I'm sure we spoke about it. One of the biggest mistakes I think the US made was the seizing of the Russian private assets and then the seizing of the reserves, essentially making them worthless. Because that sent a signal to everybody that US money is not good.
Well, it certainly sends a signal that you don't have all of your savings in something that somebody could seize. And so, I think on the margin, that's going to, encourage countries to think about saving in a stateless currency, right? Like that's what Bitcoin is. It's a separation of money and state, right? So it's a currency, does everything other currencies do, but it's not controlled by any one nation.
So if we're looking at the US regulatory side, what are you expecting to change? Because I'm starting to think, how far do we move back towards some variation of ICOs, for example? Because it is a great vehicle for capital formation, needs tightening up. Things like the US users can't use perps and other margin products while everybody else can. Where do you see the regulatory landscape shifting over the next year or so?
Yeah, I actually don't spend a ton of time on the regulatory side since we can't really influence it ourselves. The main theme, though, is regulatory clarity, and that's been, I think, what's lacking, is that because of the lack of clarity, some things like trading of tokens went offshore to places like the Bahamas, and we've had some negative consequences from that. So I think any clarity that the agencies in the United States could provide will be helpful. And I had served as chairman of Bitstamp for a long time, and it is difficult to manage a business when there's nothing written down. You have no idea what is a security, what's not a security. So as soon as there's more clarity on that, that will help. And then I think the bigger part is to help institutions get engaged in the space. In 2021 and 2022, a lot of very big institutions were doing a ton of work, going to get engaged. Some did some small investments in the space. And then, we had, Terra Luna and FTX and all these bad things happen. And with the lack of regulatory clarity, it kind of scared off a lot of institutions and they put it on ice. That's my biggest prediction, is that once we do have regulatory clarity, bigger institutions will come back to the space over the next, say, 2 years and really start investing in it in a real way.
I also think the finance sector will go all out for this as well, because they know how much efficiencies within this, whether it's in the payments or whether it's tokenizing equities and all other kind of financial assets for settlement, clearing, everything else. It feels like that is going to be, whether it's this cycle or next cycle, but that's going to be enormous when that happens.
No, I agree with you. And I think the ETF was huge in kind of breaking that log jam, where for years I'd be out there evangelizing for blockchain, and you talk in some firm and they would say, oh, well, we can't invest in Bitcoin for compliance reasons. I'm like, well, that's interesting. I've run a couple compliance departments, and I have no idea what you mean. What do you actually mean by that? Like, why can't you do Bitcoin for compliance reasons? And then they just give the circular, well, for compliance reasons, And so now that BlackRock and all these very reputable firms have Bitcoin products out there, that just kills that. That was kind of the last, inane reason to say no. But it was a reason a lot of big entities said no. But now that you have, $35 billion flowed into branded ETFs, like BlackRock and Fidelity and Bitwise and others. So with that, I think it opens it up. And you're right. Wall Street, spends each company on Wall Street spends billions on all these silo databases, and then every day they have to reconcile them to their own databases inside, and then they got to reconcile to the outside clearinghouses and all that stuff. And I think that'll take, the better part of a decade for all that to really actually happen, but it's coming. And Mike Cagney at Figure's a very good leading example that he had previously been a macro trader with us back in the day, and then founded SoFi. And they're doing mortgages on the blockchain. And I actually started out as a mortgage securities trader. And it's amazing how many people take a bite out of your mortgage payment, right? Like, there's all the servicers and the people, and, it takes 55 days for the check to get from one person to the other person. So putting it on the blockchain is very efficient. And his company Figure already has 10 billion of mortgages on the blockchain, and everyone's talking about RWAs, that's real. Like, that's a real world asset, and there's 10 billion of it already on the blockchain. So those are the things that are help big institutions get in the space. Most of the main alternative managers, like Apollo and BlackRock, they're doing funds now that are on the blockchain. I think those are a bit more proof of concept than hugely important today. But it just, opens the direction we're going. Another great example, Ondo is putting treasuries on the blockchain. And so, the U.S., as you said, needs to export $2 trillion of debt every year, right? And what better thing than via, Ondo or stablecoins, because you're finding new buyers in every little hamlet on earth, right? Anybody with a smartphone can now be a loan money to the U.S. government, right? Like, anybody with a smartphone in the weirdest corner of the earth can buy a treasury on Ondo or whatever. So, there's that kind of stuff that is actually happening in the real world.
Yeah, and the other thing that we're looking at Real Vision and where the world's moving is I think we will disrupt asset management itself. The idea of crowdsourced, tokenized asset management, where people form an opinion about maybe this is a basket to invest in, you spin up a token, and it creates the ability for people to create their own product. There's no real reason we have asset managers in many instances. You know, any group of smart, well-educated people can get together and try and outperform versus hedge funds or benchmarks or whatever it is.
Oh yeah, no, I love that concept that if there's some talented managers wherever they are around the world, you can have all kinds of league tables that show their risk-adjusted returns versus everybody else, and money can flow to the better managers. You know, all that is possible, and it's certainly coming. And my favorite example of that was the Constitution DAO. You know, remember that a couple of years ago?
Yeah.
Where in days, a group of people that did not know each other, didn't trust each other, had no reason to be connected, decided they were interested in the same thing, purchasing the last privately held copy of the U.S. Constitution. They got $40 million together in a few days, and they went into Christie's or Sotheby's, I forget which auction house had it, and competed with it. And the fun bit about that, you know, they didn't win. Ken Griffin
stole it from them, didn't he?
Yeah. The founder of Citadel, quote, won the auction, but the concept was so cool to see. And their final tweet was, "How much for Citadel?" And that is what it's about, right? It's like you can get a group of people, maybe millions of people together, and they could do that, like start buying money managers and start, intermediating, credit and all that kind of stuff. So it is definitely going to happen.
Well, look at the instantaneous capital formation that's happening on pump.fun and meme coins, right? So forget whether you care about the meme coins or not. What you've got is instant capital formation and instant value accrual.
Sure.
Which is, to your point, we've now gone from the DAO idea to suddenly super liquid instant pools of capital that follow an idea.
Yeah.
It's, as you say, this is coming at everybody very fast. They don't realize it, but this is where it's going.
No, I agree. I think it is fascinating. And obviously there's going to be some things that flame out and go to zero. And then there's going to be some things that work well, and that's what, the creative destruction of the markets are all about. But I agree with you. It's doing everything much faster and much more distributed, right? Or, it's letting anyone with a smartphone participate in the financial markets.
So then that begs the question is, where does that leave VC in like 4 years' time?
Raoul, it's a great question. And theoretically, nowhere, right? We're going to get totally disintermediated and this little DAO is going to run everything. But, I remember stepping onto the trading floor in 1987 and go, wow, this is all going to get arbed out. It's all over. A couple years and this will all be over. And, 40 years later, Wall Street's, Goldman reported 15 billion of revenues or whatever, right? And so, even though theoretically I kind of agree with it someday, all that'll get arbed out, I think it'll take, more than our career to see that through. That yes, in the future, there are going to be decentralized things that have, very strongly competed with venture capital funds or other types of products. That's decades. The one that is coming is, stablecoins are basically money market funds on the blockchain, right? And that's working. Those work really well. And so, stablecoins are the simplest proof of that, obviously, because it's a very simple investment strategy compared to venture capital. But it's the first step.
Yeah, it's super powerful. So in terms of Pantera, what kind of investors are you seeing? And are you seeing it more on the VC side, more on the liquid side, hybrid? What are you seeing out there right now? I don't think it's been the best capital raising environment last year. There was some money, but not a great deal. But what are you seeing? What's the trend in who's coming in?
Yeah, so that's a good question that I actually don't know the answer to. We were fortunate to raise our last fund right before the bear market in 2021. And so we had a lot of capital to invest when everything was really cheap. We're going to finish up our current fourth venture fund by next summer. And so we're raising our fifth fund right now and through 2025. So we're just at the beginning of those conversations. I would say, though, they're much more constructive than they were 3-4 years ago when we were doing it last time. And in particular, the Middle East, the GCC nations, much more interested than they were earlier. And, for them, it actually makes a ton of sense because it's essentially a frontier market that has $3 trillion in market cap. Like the days, we were wandering around trying to invest in Sudan or something like that, you get like $500,000 into it. Here, like you could put a lot of money to work in blockchain. So it really does suit the needs of big investors like the sovereign wealth funds in the Gulf.
And that's my mental model of all of this is we're building a new economy. It's going to go from 3 trillion today to 100 trillion maybe within 10 years. And that is going to be the fastest growing economy of all time, obviously, the fastest accrual of wealth. But it acts like an economy too. It has GDP. There's all sorts of things. And it makes total sense when you say, well, they can look at this as a frontier economy that is highly investable.
Yeah, it is. And in particular, Bitcoin trades 40 billion a day or whatever. Like you could put an enormous amount of assets into it. So again, that's why I think it's a great space. Because if you zoom all the way back, when we were at Goldman, they did the GSCI, and now everybody thinks of commodities as an asset class, of course. And then in the 90s, we were doing EM together, and everybody thinks of EM as an asset class. I think it's the same thing here. In 10 years, everybody's going to think of blockchain as an asset class. They're all going to have an allocation. And with most people starting literally at zero allocation today, and, they put whatever 600 basis points, whatever the ultimate number is going to be in, it's going to drive value up. And the cool thing is it's already investable now. There's, a few firms in the space that do it and a few, public companies. And, so it's already an investable space.
So what excites you in 2025 in the crypto markets overall? What kind of areas are interesting to you?
The fun bit about blockchain is there's dozens of interesting use cases. So, there's a lot of things that we've been focused on. Probably the biggest of them is the intersection of AI and crypto. Obviously, AI is a big thing. It's impacting lots of markets, but it really needs crypto, and that's something that's very important. That an AI agent's not going to go get an account at Chase Manhattan Bank, right? So they need a natively crypto way to do business. Blockchain is it, and so there's a ton of applications for payments within the AI space. The other one is, AI is, best if it's not controlled by one person. We've tried that in social media and other things, and it's a little tricky. And so I'm a big believer that AI is going to be way better if it's decentralized, both in governance and ownership. And so we've invested in a handful of projects like Sentient and Sahara that are trying to help the ecosystem for decentralized AI. And then the last bit of that is the models have grown so fast, they're so big, and there's so much hardware being thrown at it. They've essentially learned from everything that's free on the internet. They've read the internet and learned from it. And blockchain is great at incentivizing people. And you need incentives to get more data into the next generation of models. And so we've invested in a handful of projects that help incentivize people to contribute more data than they currently just have out publicly.
Yeah, because there is so much private data that everybody's got in all sorts of things that we don't accrue value to or don't think it has value, but we don't know what to do with it. If we can, crave some economic value for that data.
Exactly. Like if you can give someone a financial incentive to share something that's personal data or medical data or whatever, they will.
What do you think about Barry Silbert's idea? Because I saw him recently at his event in Ojai about Tau, and so the infrastructure layer part of the AI kind of protocols that are out there outside of the Asian stuff. Any views on any of that? I can't figure it out, but
yeah, I don't have a strong view on that project.
But the problem is with AI, there's a lot of complication. There's a lot of things that are too early to get real signal from as well. The agents that we see online are not really agents, stuff like that. What else is interesting to you? DeFi? Where do you think that's going? I think stablecoins are just going to continue to explode, right?
No, I agree. Stablecoins solve a very, very important use case. There's a lot of cool projects out there that are allocating yield, back to the users, and there's all kinds of things that can happen there. We're still actually focused a lot on the competition in the layer one space, that been big investors in Solana over the last year or so. And then one of the projects that we're invested in that I think is fascinating is Telegram's TON token, because almost all the projects, and according to CoinMarketCap.com, there's 24,000 projects out there. Almost all of them are very cool technology that's trying to build a community, and it's been done, but it's very hard to do that. Whereas TON is a massive community, almost 1 billion people, that's trying to do blockchain. And that's probably not as hard to do. And they have been able to spin up projects that are so much bigger than anything else that's out there, just because they have hundreds of millions of people that could actually participate. And they're the only billion-person community that can do blockchain right now. Facebook tried to do it, and they did a gorgeous design of a project, 4 or 5 years ago. But regulators got that down. And then the big communities in China don't have the ability to do things. So Telegram is interesting because they're the only massive community that is doing blockchain. And obviously you need a digitally native payment system on, social media. So it's one of those things. And we actually did try it, 7 years ago with Kik Messenger's Ken ecosystem, right? Like, it's a great idea that we tried earlier, maybe too early, maybe got bad luck with regulation back then or something. But it's one of those ideas that has to happen. We think TON has a great shot at doing it. If they don't do it, somebody else will do it.
And also interesting to see Manny Stoltz coming in as the CEO, and I've known Manny for a long time, you probably have as well, and their move towards the US, because there was always a lot of concerns around TON because of the ecosystem and the secrecy that was involved in all of that. But it seems like they're coming towards the US and not away, which is very interesting.
No, I think that's good. And again, that's part of the whole thing about regulatory clarity. It just helps both sides, right? Like, if we both know what's permissible, what's not permissible, then, we can create things and make products to help consumers, right? Like, we're trying to help people get things done. And the alternative are really expensive. Migrants spend a month's wages on their remittance companies, right? Visa, MasterCard charges 300 basis points. Those things are very, very expensive. So I think it is good for the government to engage these systems that will allow people to move value at a very, very small fraction of what it costs right now. So obviously there's some work to do, but it's good that that TON is looking at the U.S. now.
And do you think we're going to start to see the IPO market open up for crypto firms now as well? Because there's a bunch of firms that have been waiting to go, and the VC market, the whole system needs the recycling of capital, and it's been very slow for that stuff. But we need Circle to go, and maybe Kraken to go, and a whole bunch of these things. Any thoughts on that?
I agree with you. It's massively important, and I'm very optimistic. Circle's a great company. We've actually been invested in it for 10 years, right? And it's huge, it's valuable, it's really good. They should be public. And so hopefully they go public. And, frankly, MicroStrategy shows how much desire there is for people to invest in something in the stock market that's positively correlated with crypto. I think it'd be great for our industry if we had, a lot more public companies rather than just a couple. And, Circle going public would be fantastic. Any of those companies you mentioned, Kraken, there's some other good ones that are close behind. So I think it would be great. And, again, it's a $3 trillion market that only has a couple of public companies. It's crazy, right?
Well, I mean, that's almost the point of it as well, right? In the end, the public markets will be on blockchain. It's going to absorb all of this in the end.
Yeah, but I would love to see that happen. And then, people could be trading, go short. If people don't like crypto companies, they could be short, and all those things. You really develop a normal market for crypto.
So you've been in this business a long time. What are you seeing today that you didn't think you'd be seeing 10, 12 years ago when you started looking at this? I mean, are you not thinking it's slightly la-la land now? We've got, a whole administration that's entirely behind it, holding crypto balls. And, did you think we'd get here?
That is a good question. I love that. Just thinking back to the earliest days.
What were you thinking the world would be like versus what it is like?
Yeah, you're right. And so there's a lot of things that we thought would happen overnight that, haven't happened even in 10 years and all that. So yeah, I would say that the nominees for Trump's cabinet and all of his picks from the vice president down, his special advisors like Doge, they seem literally universally very pro crypto. I mean, I'm sure there's one or two out there that aren't, but like every time I hear a new name, it's somebody that, massive owner of crypto, super positive about crypto. So that really is pretty wild, right? And
that you and I are talking about a strategic Bitcoin reserve. I mean, this is like...
Yeah. I agree that the change is pretty stark because President Trump did go pro crypto in early May. So if we were sitting around in April of last year and said all that was going to happen, that you would not have gotten many believers. So that I would have to say is the biggest surprise, the biggest change. The other thing that I think is not yet thought enough about is the change in the dynamics in Congress, right? So for a long time, it was okay to be just a complete reactionary nut of anti-crypto person in Congress, right? You could just say all the old, there's, bad things happening on, Bitcoin or whatever, all that kind of old crazy stuff. There's bad things happening with the US dollar, the SWIFT, cash, all, there are bad people and they sometimes use all these different payment systems. So, there were a lot of negative people and they really influenced policy. In the midterm elections, the crypto super PACs went 34-4, but no one seemed to notice. It just kind of, they did a good job, but it kind of went below the radar screen. Maybe because no senators, were up. But this time, a handful of anti-crypto senators get defeated. And the crypto PACs, I think, went 54-4 this time, right? And invested, whatever you want to call it, $200 million in the election cycle. When you go 54-4, people notice it, right? And so my kind of unconsensus observation would be, I think you've heard the last anti-crypto stuff out of Congress forever, right? Like, who's the no voter out there? Like, who's the constituent that's like, if my senator goes pro crypto, I'm voting for the other guy. Like, there's nobody out there like that, right? And so with no constituent out there being negative and 50 million Americans owning crypto and being positive.
And the young generation that they want.
The young generation, it's crazy to be anti-crypto. It really is. It's crazy. And then, obviously, free speech isn't free. It costs a lot of money to run elections, and the crypto PACs invested a lot of money. And so, I think the huge change is not that a Republican won the presidency or the House or the Senate. Is I think forever you're not going to have anti-crypto people in Congress because it was crazy all the time. Like there was no reason to be anti-crypto, but they all want to get reelected. And they just saw what happened. And the most amazing thing is what you mentioned, the young voters, right? And this is a theme that we've talked about a ton in our investor letters. The majority of Americans are under 40. And young people love crypto, and so there's no axe to be anti-crypto, like if you want to get elected. And those people vote, right? And so this last election, 2024, had something I haven't heard in decades. Young Republicans.
Yes.
The majority
complete change
of males under 30 years old voted for the red candidate, right? That doesn't happen, right? And even females under 30 swung 14 points towards President Trump, which is got to be crypto, right? Like there isn't, so to my mind, that's the huge change is that young people vote, they love crypto. The other candidate was not positive on crypto. The Republican candidate was. And as you know, there are a lot of single issue voters out there. And they love crypto so much.
If you're going to take it away from them, you are taking away their hopes and dreams. Fact. Right? You do not do that. Young kids are fucked. They can't buy a house. They're never going to earn enough money. They're so far behind in the economic system. And you take the one shot that they have and you think they're going to vote for you, never going to happen.
I actually totally agree with you. I think that that the policies of the Fed and Congress for the last 4 or 5 years inflated away the ability to buy a house for a lot of people. And, you own a house, I own a house, so I'm fine, right? But 35% of Americans don't, right? And they just got, really bad policy driven to them. And so it is rational to buy crypto, right? Like all my kids' friends, when they're like, hey, should I invest in it? I'm like, yes, it really is a rational way to get invested in the space. And then as each generation cohort, gets older, they'll be buying more. And that's why I'm so bullish on crypto for a lot of reasons. But a huge one is that the current generation of, I was going to say 20-somethings, but you can buy crypto with your smartphone when you're unbanked, right? Everyone always thinks of unbanked as some adult walking around Africa, right? No, it's a kid in New Jersey, right? Is unbanked, right? But they can buy crypto. So yeah, I do agree with you, and that's why I think it's a huge kind of sociopolitical issue, and I think it's amazing that the Democrats didn't get that. And
it feels like it's a progressive Democrat thing.
No, I know. We actually published a piece called "The Progressive's Dream," listing all the features of Bitcoin. This thing is the dream from a progressive, right? Financial inclusion for all 4 billion people on Earth, and no remittance fees, and it's amazing how they shouldn't have made it partisan anyway, but to the extent it became partisan, it should have been the other way around, right? It should have been the Dems that were like, oh, Bitcoin's their dream product, right? Get rid of all the bad bank CEOs and the remittance companies, all that stuff. So I agree with you. That's why I'm really pumped, because they're mobilized now. These young people vote. They're going to make stuff happen, and it's great. I really love seeing that.
Yeah, it's super exciting. I'm talking to you. I've just realized I think I might have orange-pilled Scott Bessent. He came to my house in Spain for the Global Macro Investor Roundtable. I think Dan Tapiero was there, a bunch of other people that we know. And he came for the roundtable because he was a Global Macro Investor subscriber when he was at Soros. And that's when I think Emil Woods first pitched Bitcoin.
That's great. That is great.
So maybe,
yeah,
I orange-pilled Scott back in the day.
Oh, that's great.
So final question for you. Why do you still do what you do? Why do you not become Wences and just disappear? What motivates Dan to be at work, building Pantera, doing all this stuff, when really you could just disappear quietly? You won the game. You won the greatest macro trade of all time. Wences may be one of the greatest macro trades of all time, but you're up there with it. So why?
Oh, so I thought about this early in the game, and I still believe it. Is that you and I have been investing money, managing funds and things, and yeah, we probably help some pension plan give another basis point to their beneficiaries, right? Trade dollar yen and all this stuff. It's been good. We've been successful at it, but in the end, does it really do much, right? I'm so passionate because this is going to change the world, right? Blockchain is so important. It's going to have a massive positive impact. And we just talked about it, literally for 1 billion people in the next few years, right? All the migrants that don't have to pay a month's wages to their remittance company, all that stuff. It's just fun, right? And if I could be just a tiny bit of pushing that change over the finish line, it's great. And so I'm so energized by what the community is doing together. I really do want to just kind of see what I can do to kind of nudge it, to keep pushing it over the edge.
You can see the smile in your face that you actually just still love it.
No, it's great. And every day something new and crazy comes up. It really is fun. And sometimes you get maxed out and your brain's about to overheat, but it keeps evolving. And people often ask, what inning we're in. We're really in the first inning still. Most funds have zero exposure. Most people, have nothing, really meaningful in the space. So we're still, I think there's decades more to go. And yeah, maybe I can't keep doing this for decades, but it's fun to do it, to kind of get it to escape velocity, right?
Yeah. And as I said, how I think about it, and when we talk about it in our fund of funds, it's really with 3% of the journey. If it's going to 100 trillion and it's only 3, you're like, when people say, is it too late? You're like, it's only 3% of the way there.
Yeah.
And therefore just relax. It'll all play out over time.
I really agree with your broad strokes view of how far we are. And for 11 years, people have been saying, oh, it's too late. I missed it. No, you didn't miss it. It just keeps going up. And so if it on average doubles every year, the 11 years I've been doing this, like, yeah, what if it only does it one more year? Like, you still doubled your money, right? Like, and it might do it for another 10 years or whatever. And again, like, my main thing is don't put more than you could lose into crypto because it could go down 80% next week. But you got to have some in it, you know?
Dan, as ever, fantastic conversation, my friend. Good to see you. And let's see how 2025 plays out. We're all pretty bullish. And let's see.
Great. Thank you so much. Fun conversation.
As ever, fabulous conversation with Dan. You can see that this really is the greatest macro opportunity of all time. Dan's certain of it. He's been on that trade from day one. And I've been on this trade for a long time too. It is the greatest macro risk-taking opportunity the world has ever given us. And our job is to not fuck this up. So I wish you luck. Follow the principles of don't fuck this up. Make sure that you wise up, get the knowledge that you need, understand how to manage risk, and then go for it. See you out there.
Consensus Hong Kong 2025 is where the global crypto community converges to shape the next era of Web3. From February 18th through the 20th, Hong Kong becomes the meeting point for leaders across finance, technology, and digital assets. This isn't just a conference, it's where deals are made, partnerships are forged, and new opportunities emerge. Consensus features exclusive networking lounges, expert-led sessions, and invaluable insights from top industry voices. Whether you're expanding your network, building your brand, or closing your next big deal, this is the event that moves markets. Visit CoinDesk.com/consensus-HK to secure your spot and use RealVision15 for 15% off. Don't miss your chance to be part of the industry's defining moment.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.